Good morning. Today is Friday, December 22nd, and this is the last Friday before Christmas on Monday. And the time right now in Singapore is 9:40 in the morning. And overnight, we can see equity prices managed to recover a little bit after Wednesday's sharp reversal in the equity index. We can see in the Dow Jones micro E-mini Dow Jones futures, we can see the high traded was 38,014, and we can see a very, very sharp pullback resulting in a loss of about 1.3%. But last time we saw the market recover back 50%, and this market right now is still vulnerable to the downside. Tonight we have the personal consumption expenditure data, and this could be the market. This could be the data that actually caused some movements tonight. And I think the market is biased to the downside after the dip from 38,014. There's a possibility market may extend lower in a three-wave pullback, targeting anywhere between the 37,000 levels. So do watch out for a dip into this level before the market stabilizes. And I think from here onwards, the market do have the potential to resume its rally. So be on the lookout for this move coming up tonight. And over in the S&P 500 basis, the the micro E-mini S&P 500 futures, we see similar pattern. The market traded to a high of 4,830.3 before being sold off very, very aggressively. And last night we see a rebound that may actually have very little upside potential. I think the market remains technically vulnerable to the downside, targeting anywhere between the 4,700 levels. So again, look out for that pullback in tonight's trading. Over in the micro E-mini Nasdaq 100, similar pattern. We see the high traded at 17,073.5, dropped down to 16,767.5, which was the previous all-time high traded on November 2021, and the market rebound back almost 50%. Right now it is vulnerable to the downside. I think the market has a potential to test the 16,655 to 16,600 levels. To look out for this gap. Whether the market can cover this gap remains to be seen, but I think technically speaking, this is the level to watch before the market resumes to the upside. And over in the Nikkei 225, Nikkei also fell off from 33,750, which is very, very close to the mid-year high, and highest traded so far is at 33,870 last month, and market right now remains vulnerable to the downside, very much in line with the Wall Street expectation. If the market do extend lower, the level to look out for with 32,500 to 32,350 levels for the market to stabilize. Over in Hong Kong, market attempt to rally, but I think this rally has been pretty weak so far. The highest traded is 17,003. I think market basically is also vulnerable to the downside. And if that's the case, I think the level to look out for will be the 16,000 levels. Okay, do watch out for these levels one more time. A retest of this level. So far, we have the low of 15,980 in the futures contract traded in the Hong Kong Futures Exchange. And in the dollar index, you can see dollar index pullback yesterday after an attempt to rally, but this rally has no leg because the market remains basically vulnerable after the Fed signaling of a pivot. So there is massive amount of short orders that are in the marketplace. So there is a very likelihood, very little upside potential. However, technically speaking, now we have a double bottoms of sorts. Overnight, we have a marginal low traded at 101,375 relative to the last Thursday, to the Thursday low of last Thursday low of 101.39. So we can see there is likelihood to be a possible bounce here, and do watch out for that possibility. I would love to see prices going back to 104.22 at some point in time. So this market right now has been so heavily sold off, and do watch out for the personal consumption expenditure data to actually excite the market. Over in the euro dollar, we also have a triple top in place here. So technically speaking, the dollar may be in for a bounce going forward, and if that's the case, we probably will see a cap being put on the principal currency, in particular the euro dollar. Overnight high is at 110.30, 110.12 thereabout. We can see this is a triple top here, and if the market is not able to punch through and close above this level, there's a possibility the market will pull back to retest the low here that we are seeing near the 108.90 levels. Okay, over in sterling remains very well supported. We have a three-way pullback, and which is slightly above the expectation of 0.26, but that is fine because we have a three-way pullback already, and market sits within a order block here at 126.09 to 126.46. The market may actually go higher in contrast to the view for the euro dollar. And dollar yen remains weak because the dollar basically has been falling, and there's a risk that the dollar yen may continue to trade even below the 140.95 low that we have seen so far this year. So we can see we're going to have a mixed bag here. While there's a possibility of a bounce on the euro dollar in the dollar index, which suggests lower prices, dollar yen does not seem to be in that category, whereby the fundamentals in the dollar yen suggest that we probably will see lower prices. The Aussie is very interesting because the Aussie traded to the 0.68 handle, very near an order block at 0.6805 to 0.6850 levels. This market is actually quite vulnerable to the downside because near-term technical considerations shows that MACD is diverging, the RSI is in overbought territory, so there could be possibly very limited upside potential with the possibility of a climb down in the Aussie unit. Okay, to look out for that possibility. Now, when you look at the dollar versus Canadian, we don't have a double bottom here, unlike the dollar index. So this market remains vulnerable to the downside. So again, trade to the downside as much as possible. So like I said, it's going to be a mixed bag. We're going to have different signals coming in from the dollar pairs here, and some of them could be in contrast to the others. So we could be seeing a mixed bag here. Okay, but generally speaking, the dollar is right now on the rope. And then what we see is that in the precious metal complex here, we can see gold actually attempt to rally. Last night high is $2,055, but you can see this rally has very little momentum behind it. So there is a real danger that there is going to be a pullback in the gold prices, and how gold prices closes at the end of 2023 will be very telling going into 2024. I have always maintained that $1,960 is the key level to watch. If the market somehow closes below this level, it will lead to further declines into January. In the silver market, silver seems to be performing a little bit better than gold right now. The high trader is $24.50 with no visible upside resistance until the November close at $25.18. So do watch out for further gains in the silver markets. And over in Bitcoin, Bitcoin has been doing relatively well. Is now, as we are speaking, retesting the high that we saw in the first week of December. The high traded so far is 44,715. Currently, the market is trading above the 44,000 handle. Yesterday is the same thing. Yesterday high was 44,267. Actually, this is actually Wednesday. Okay, Wednesday high. So yesterday we do not have a high yet, and right now the market is again pushing on this level at. There's a good likelihood that the market will take out 44,715 going forward, targeting maybe perhaps the 48,000 in the next challenge. So this is my 2 cents worth. And in the meantime, just be aware that Monday is Christmas and Tuesday is Boxing Day. Both days I will have no update since there's no market. The next update will be on Wednesday at the earliest, if any. So in the meantime, I want to wish all of you Merry Christmas and Happy Holidays for those non-Christian. In the meantime, you take care and Happy holidays. Bye-bye.